Good evening, everybody. Nice, quiet fall evening. I think hunting season started here in Pittsburgh today. Could hear the gunshots going off. Still have some deer coming to the corn crib, so I hope they didn't get any of our friends. So, hope everybody had a nice Thanksgiving weekend. It's always good to get away from the markets for a few days and then come back and see what's going on. So today a little bit of consolidation, but I say consolidation. There wasn't any real severe sell signal. Just an indecisive pullback day, which might mean there could be some pullback to the T line, but there wasn't any real forceful selling today. Yeah, I'd be glad to have them have a raccoon season. And I'm sure there's going to be some big deer out there that I've been feeding for months. So expect some profit taking up here. Not that that's going to show any great severe reversal in the markets. I wouldn't be surprised if they don't come back and test the T line on the NASDAQ and the transportation index. But as of right now, there's no real sell signal, no real change of investor sentiment. Yeah, I'm pretty sure today was the beginning of hunting season. I heard the gunshots early this morning for the first time. All right, some of the things that are, you can see that the dollar is still in this uptrend, and that the crude oil prices, the F7, crude oil prices are getting to this point where they're starting to become range bound. See that it's kind of moving sideways, bouncing between the 45 or $44 range up to the $54 range. So again, that's probably going to be a function of how far back it starts. And that's just looks like we're going to be sideways for a while, which is fine if you're trading oil stocks, and that if people realize that there's not going to be huge oscillations where it headed down to about the $35 area. At one time, it was up at the $115 area. If it's just kind of range bound, that means that each individual stock in the oil sector can be analyzed on its own merits. Let's see. I did go. We're still now watching cattle. This is kind of where the trend, maybe not quite there yet. But we can see we had kind of an evening star type signal, or the gap up in the overbought condition. Now it's back down to heading back to the T-line area. And we're still long the hogs. Possible any weakness tomorrow, it will come back down and test the T-line. But as you can see, right now we're in wave one, kind of a wave two, then a breakout of the bobble type pattern going into wave three. Other than that, the other, I guess, soybeans came back up for a while. it was up, came all the way back down to the bottom of the range. But as you can see, it closed today. This is after hours trading. Closed today back up more than halfway up the range. So you can see where it broke out through wave 1, wave 2, now in wave 3. Other than that, there's not a whole lot to really get your teeth into. You can see how coffee, notice coffee had the huge bearish engulfing signals up here, starting the downtrend. Now we're back in the oversold area. So now starting to look for buy signals, seeing if they can bring them back up above the T line. All right, again, with the market trading as strong as it has, won't be surprised to see a little bit of consolidation like we saw over here. But that would be good for the market in the sense that the longer this market doesn't show exuberant buying, the stronger the uptrend will be, that there's no flash up and flash back down. We recommended IPXL today because there was your left-right combo, bullish engulfing with a booster, confirmed by getting up above the T-line. You can still buy this one on positive trading tomorrow, that doji sandwich continued confirmation. We suspect the first target is up here. Second target should be the 50-day moving average. And gold, nugget anyways, came up a little bit. But gold itself, not doing anything magnificent as far as telling you there's a drastic turnaround. So on something like nugget, you still want to be very careful about jumping into this one. Now, if it does come up above the T-line tomorrow, then you can start looking at it. But that would also mean that gold is that gold is moving up. John, again, where is that occurring? Where does this really become a sell signal potential? When your stochastics look like this. This just tells us that this was kind of a consolidation day. So if it opens positive tomorrow, what's that telling us? We probably have a doji sandwich. So this isn't really telling us that there was selling going on, because it doesn't fit the description of a doji in the overbought condition. So with that, that's kind of where you're going to get some more insights. This next weekend, as you know, we're going to have our but our basic 2-day training, which is the bread and butter of learning where these signals work, which signals to look for, the other criteria to tell you that there's been a change of investor sentiment, or how to analyze that a trend is continuing. So if you're relatively new to the Candlestick Forum and you're getting bits and pieces of candlestick knowledge in these type of sessions and during the day, it really comes together as far as knowing what you're looking at and not learning as we're looking at it from here. If you go through a 2-day session, we will, you go through that 2-day session where you see all the information put into a nice chronological order, your understanding of how candlesticks work will be dramatically improved or enhanced. Bob, I would imagine we'll hit some option training right after the first of the year. Up until recently, usually somewhere in October, we start doing more trainings. That's when it usually gets yucky outside. Well, it hasn't really been yucky outside. So we're going to be doing probably January, February, March. You're going to get a lot of trainings where we probably do maybe 1 or 2 trainings a week on days we don't have something else scheduled. So anyways, this one, we know what a doji sandwich looks like. We know that we've had a strong reversal. Stochastics aren't anywhere near the overbought area. But if they open this positive tomorrow, you can still be buying this one fairly aggressively. let's see, we did Nugget. So Nugget is showing that there's a little bit of strength coming up. So you want to keep an eye on the different gold stocks. For example, ABX, showing a base with a little scoop type pattern, double bottom. That one can probably be bought on any positive trading tomorrow. So we also want to know what our different patterns look like. See if I can do this. So if we can visually see that there's kind of a trend. Oops, how's that? Well. You can see kind of a pattern. In this case, notice how the wedge is coming into effect. And they kind of broke out to the top side of that wedge. You can be buying this one with a new indication or a new confirmation that the bulls are definitely taking control from this point. So you want to keep an eye on this one. But a lot of the stocks today that have decent patterns didn't do too much today. Didn't do too much on Friday either. But that's not unusual. Friday was a half day. Today was just kind of getting ready for the new trading. And as we say, here's Lite, L-I-T-E. They've got good pattern setups, so we can identify what the pattern setups are. Here's our J-hook pattern. So if we can have a watch list of stocks that are about ready to move based upon their pattern setup, now we've got a much better feel for where to sink funds into trades, especially if we know when we wake up in the morning and we see the pre-market futures one way or the other. For example, anything being bought today, you kind of held back a little bit because the pre-market futures are showing that the market was going to open up down 49 points or so. And so when you have that in the back of your mind, that pretty much tells you, yeah, let's just watch to see which ones are going to act strong coming out of the chute. And if none of them do, you just kind of sit back and relax a little bit. So, excuse me, here's another one, SCMP. You can see the pattern setup. You can see the breakout, and then it failed, but it did close back below this level. So if it opens positive tomorrow, you still can go after this because it's still setting up for your J-hook pattern. Paul, I don't think the recount thing is really bothering anything. I think it's more that the market's acted so strong that they've got to let it digest some a little bit. I mean, the market acted strong here. This is the Dow. Had a few days of consolidation. Acted strong again. Wouldn't be surprised to see a few more days of consolidation. I don't think there's anything out there to start scaring investors. So if we can see where the ultimate breakout should be, notice our big fry pan bottom on this one, MPET, broke out, had a big day. But on a big day like this, notice where our stochastics are. Not anywhere close to being in the overbought area. So what's this tell us? They open this positive tomorrow. It tells us the profit taking that occurred. I hate that thing. Profit taking that occurred from here back to here is over. If the breakout from this fry pan bottom is still in progress, you can still be buying this one based upon what do we expect coming out of a fry pan bottom. Very strong price move. So if you look at something like this one, notice the fry pan bottom and notice where we are, right nudging up to the 50-day moving average. So if this starts trading positive, what's that going to tell us? The fry pan bottom is starting to break out. The resistance level that everybody else is watching is now being breached. That's when a lot of the force will start coming in. Yeah, the biotechs might just be taking profits. You saw Labu had the opportunity of this belt hold piercing signal confirming came back to the 50. Now you have to see if they're going to hold this up still. So if Labu, which is the ETF, is getting soggy, that means some of the other ones in that sector might be getting soggy, like LV or CLVS. What was our other one? CLCD. Whoops. CLCD. So if this doesn't open positive and trade positive tomorrow, if you were trading this one, what would that be telling you? Kind of now in this wedge formation, which tells you there's a lot of sideways pressure going on. CNO, another one that is setting up, showing a little bit of a possibility. And when I say possibility, if it's traded up this high, that usually means investors aren't worried about it trading up here because it's already been up here. Maybe it's going to go back. So you want to keep an eye on this one. That might be a good one to trade. No, this isn't a dumpling top. Remember, a dumpling top, but this was the dumpling top. Big move, but notice where it bounced. Left-right combo, smack dab off the 50. So it's not a dumpling top now. It's more, again, looks more like a wedge formation. Remember, Kevin, we're still trading the price, not the stochastics. The fact that stochastics are heading down, when this broke out of the fry pan bottom, yeah, I'm surprised the stochastics have turned over that much with that type of insignificant move right in here. But if they start trading this positive, you're going to see these stochastics turn right back up again. TZ, yes. But remember, a lot of these stocks can bounce right back up to the T-line. Actually, ABX did get through the T-line. But remember, the T-line is very important. A lot of times they can bounce up to the T-line and fizzle. So you still want to get that final confirmation that the T-line is not going to act as resistance anymore. Another setup that could be possibly a J-hook pattern based upon how it's pulled back. If it starts trading positive, so this is where you kind of get prepared, or at least let your eyes do the searching for what pattern setups there might be, knowing what the pattern is going to look like. For example, on WLB, one of the coal companies, if this opens positive and starts trading positive, it's kind of broken this little wedge, then you can see the bigger pattern, a J-hook pattern setting up. And CINA, this looks good from here because you got the little kicker signal. Now you've had a doji sandwich breaking out through this level, and this level, as you can see, is your potential scoop pattern setup. So this could have that slingshot effect still to the upside. Quote, another one. Notice where it can't close. They can't close it below the T-line. And now that today's trading, they close it up above the 50, which is obviously with a potential reversals or a resistance level. So you've got your bobble pattern setting up. So this is where visually you can calculate whether this is going to be a worthwhile trade or not. Coming from approximately the 950 to the 1250 area, 3 points, that tells us we can move from the $12 area to the $15 area, which is a good percentage move. And we've got more probability of that happening based upon seeing what our pattern setup looks like. So there are some uptrending stocks that are just continuing their uptrend, which means you don't have any real feel for how much further they can go. But when you see a J-hook pattern setting up, at least now you have a much stronger feel for when the next or if the next move is in progress and what the magnitude of that move will be. You have much better probabilities buying a stock that's already moved up if it's coming out of a J-hook pattern than you do a stock that might have moved up steadily. So here's wave one, wave two. That big gap up pretty much told you what's happening. Let's see here. But right now, all you have to do is stay long as it stays above the T line. That's on AMCC. And EXPR, same scenario. Look what's setting up. Kind of a J-hook pattern if they start trading positive off it here. So again, just very high probability setups. And if we can recognize when a setup is occurring, we know when to be buying and when to be back out if that trade is not working. So tomorrow, if we saw this open up positive and start trading positive, you can be buying it because it tells us our J-hook pattern is probably going to take us up at least up to the 200-day moving average. On the other hand, if it opens positive and closes back below the T line, it tells us our J-hook pattern isn't working. You close out the trade and move on to something else. STX, same scenario. J-hook pattern in progress. If this moved from 32 to 40, that tells us we should be heading up to about the $47 level. So if this opens positive, you know which way it should be moving, with what magnitude, and where it shouldn't trade, which is back below the T line. So basically, when I look for trades, I want to find something that's going to give me not only a high probability that it's moving in the direction I expect it to be moving, but on top of that, I can calculate how big that move is going to be. So through the years, using candlestick analysis just allows me to identify what my high probability trade setups are going to be, and at least puts me in situations where I know the probabilities are in my favor. So it used to be that I was usually the person that after things look good, and I'm starting to buy right in here because everything looks good. I'm finally convinced that the uptrend's in progress. And then, well, man, then it does this. So, and down here, I bought up here. I can't stand the pain anymore. I'm usually selling down here. And I was always the person asking rhetorically, how come when I sell, they turn it right around and head back up? At least now I know what should happen down here and what should happen up here based upon where we are in the trend. So it gets rid of that backward emotional trading that everybody likes to buy when everything feels good. And that's usually the time to start to sell. Nobody likes to buy when everything looks bad. That's the time to start looking for a buy signal. YP, you just ask questions if you have questions. That's what these sessions are for. What did I just do? STX. Okay, so when we do have something that is acting well, and we've made a lot of money on this stock because of the steady eddy, took profits, got back in, took profits. So just a very simple rule. When it started closing below the T line, time to take profits. That's when the probabilities tell us things are going the opposite direction. So there's a few good charts for going short. There was our scoop pattern breakout. That told us there was lots of indecision up here, and there's our kicker type signal today. Where's our next likely target? I would think it's going to come back down to the 50. Why there? There's a gap right here, and that seems to be where the resistance level was before. So you can short this one for a good 10% move to the downside. KRA. This is a clear definition of what's the investor sentiment at important technical levels. We can see how it failed up here at the 50. Our blue ice failure, where was our next target? The bottom of the pond, right down here at the 200. Off the 200, we did a left-right combo. Where was our next target? Up here to the 50. Got up to the 50, and we had a bearish Harami. What'd that tell us? That the buying had stopped. Where's our next likely target? Probably back down to the 200. So this is what makes things, or takes the, again, the emotional decision out of your trading. If you were buying right here, which was a good place to buy, stochastics oversold, a left-right combo, a second bounce off the 200, where's the next target? Filling this gap right about the 50. And when it got up here, did we know whether it was going to break through or not? No, that's what we were watching. So when we saw that bearish Harami in the overbought condition, it pretty much told us, all right, they can't get through. We should be closing out the position. Now the fact that they confirmed the bearish Harami and closed below the T-line tells us, all right, they're selling. Where's the next likely target? So at least we can calculate where to be buying and selling. Oh, MP for a $30,000 portfolio, I may have probably 8 positions on. And they're all equal dollar amount. So what's that? About $4,000 a position. And again, that's another thing we're going to be going through on the training is things that I do when I'm investing has all been oriented toward keeping my emotions out of my decision making. And part of that is that I would look at charts and say, man, this is a fantastic one. I normally put X into a position, but this one is great. I'm going to put 2X in. Well, now what that does to you mentally is you've kind of put your emotions or your ego into that analysis. So instead of that being a equal dollar amount unit of your portfolio, it's become your most favorite one, and it's bigger than the other positions, which means you're probably going to spend 90% of your time watching that position and not regarding the other ones as well. And 2, you're probably not going to make your next decisions based upon it being a unit of the portfolio. You're going to make it on that you are smarter than everybody else and that you analyze that that was going to be a good trade. And if it doesn't work, you're probably going to hang on to it for 3 or 4 more days longer than you should. So when I keep everything as an equal dollar amount, it's for the number one purpose of trying to keep my ego out of my trading. KRA, yeah, I wouldn't be afraid to be shorting this one on weakness tomorrow. And that will also be a function of seeing how the market opens. Where do you find a sign up for the training seminar this weekend? Ooh, man. I don't know whether I've still got it. Books. Oh, also, for those of you that haven't read all the books, the package, the Christmas package is always great to save a lot of money. Yeah, I think that's the link for the sign up. So the questions I usually get about the training session, I'll do real quick, is what do you get out of it that we don't already see on a day-to-day basis? And the answer is that we go into very deep analysis of why the signals work and where they work most effectively. But what's really important is that you're getting all this information in one flowing analysis of what's happening as far as investor sentiment, so that it makes sense as you go through logically. Not makes sense, but it becomes a very much stronger learning process to see why everything happens the way it does and why the Japanese rice traders were able to identify the patterns or the signals. And not only that, but kind of also tell you what the investor sentiment was that created those signals. So that combination of being able to recognize a signal and understanding why that signal was created or how it was created now puts you in a situation where you've got kind of the same outlook or perspective of what's going on in the market as somebody that's been trading there for 50 years. Okay, what else do we got? OPHT. So if we know that a hanging man up here toward the overbought area confirms the next day, we can pretty much calculate what's happening here. There's probably a trend channel, which tells us we could be coming all the way back down to this level, the bottom of the trend channel. Can candlesticks be used to trade short-term, like SPX, that had expiration on Monday today based on lower time frame? Yes. YP, if you remember, or if you just keep in mind what the definition of a candlestick signal is, it's the cumulative knowledge of everybody buying and selling during a specific time frame. So it doesn't matter whether you're looking at a time frame of a daily, weekly, or monthly. If you're a swing trader or long-term and longer-term investor, or if you're a day trader or a scalper. I used to trade the E-minis very successfully off the 1 minute, 3 minute, 10-minute chart combination. Right now I trade the commodities like soybeans, the dollar, lean hogs, that type of thing off the 10-minute chart. Oh, I don't know whether I can bring up the SPX. Hold on for a little bit. We'll try that later, YP. So anyways, here's another one that we could kind of calculate with the evening star type signal after the hanging man, stochastics heading down, where our next target might be, down here in this range. And ADPT, this is why you want to see what happens at a important technical level. You can see the dumpling top. You can see how they slammed it. See how they failed here at the T line. I mean, they're ready for the next move to the downside. If they do, that's going to almost zero. What was that? And there is your big bearish engulfing signal. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. And notice where this big bearish engulfing signal occurred. Right about the same level that everything topped out before. So where's our next likely target? It could either be here or even here, which would also kind of correlate with the 200-day moving average. Paul, we usually start around 9:30 Eastern time. We take, I don't even give anybody 45 minutes for lunch. We take 30 minutes for lunch. We come back and we will go until 3:30, 4:30 in the afternoon. By that time, everybody's gotten brain fried and butt sore. And then we start up Sunday again. So the first day we start from the very basics, which is starting with and going, usually the doji, even though it's one of the 12 major signals, usually takes up 50% of the time because all the indicators, all the confirming indicators that we use in analyzing the doji, we use for analyzing the other signals also. So usually a full morning on the signals, even though you've seen the signals over and over, we go through them again so that you understand why those signals occur, what formed them, and where they work most effectively. Then in the afternoon, we start going through the patterns, which is kind of an accumulation of the signals and the different patterns like the fry pan, the J-hook, the scoop, all those patterns. That will take up most of the day. Occasionally we get done fast enough that we might do a session of trend analysis of how you analyze what the overall markets are doing so you know how to position your portfolio. The next day we work on gaps, how they work effectively, entry and exit strategies, what the best way to enter a trade knowing it's confirming the signal, how to set your stop losses, there's probably 2 or 3 other topics. What we call convergence analysis, where we try to analyze how many different factors, or we look at, not how to figure out, we look at the charts to figure out how many confirming factors are telling us that this trade is turning around or heading the other direction. And then we finally end up with taking that information, and I just kind of show how to do the simple scans, which then can be applied to whatever software you're using, or how to use those scans that are already over on other softwares. So essentially when it goes from start to finish, just give everybody a full indoctrination of how to analyze the signals. Are you going to mention, do we have a gap session tomorrow afternoon? I think we do that to Mark Chaikin's group. I guess not. Okay, so again, and part of the learning process is the different elements or the different nuances that we can see in investor sentiment changing. Again, the bigger the signal, the more compelling there's been a change of investor sentiment. Ooh, is it? All right, I'll have to find out. I think it's to Mark Chaikin's group. If it's something we can do for everybody, we might be doing a gap session tomorrow. What did I just do? CPE. Okay, some of the biotechs are still getting hit. Again, notice where this failed. This isn't magic that we can see sell signals right smack dab at a resistance level. So where's our next prospective target? At least back down here to the bottom. So here are the patterns that we will be recognizing. Notice the fry pan bottom, and notice where it broke out, right here at the 50, right at the beginning of that pattern. So we're going to be going through a training session that says you look for the buy signals when you're in the oversold area. You look for the pattern breakouts, usually when your stochastics are in the overbought area. And so, anyways, we're looking at this one now as a prospect of heading back down here, down another 20%, which kind of correlates with this whole support level. Stochastics rolling over. Nothing here to show that there's anybody wanting to buy this right now. Same scenario on INO. Bearish engulfing, right smack dab off the 50. Where's the next likely target? Back down here to the bottom of the at the support level. So somebody the sessions are recorded on the weekend, so if you can't sit through the whole thing, just come back and I'll get the recording so you can watch it whenever you want to watch it. And the other element that we have, once you do one of these training sessions, if we do another one 3 months down the road, you come back free for your refresher. So after you've paid for the first one, all the rest of them are free. So here's another bearish engulfing signal, or a hanging man, Harami. This one's got the prospects that coming all the way back down to the 50, which also would correlate with this resistance level now acting as support. You can't always, Rick, you can't always expect that the downtrend will be as fast, but because we know what support and resistance levels or what support is made of, that the more congestion you have in an area, the more likely you'll have people say, oh man, if it ever gets back up to where I bought it, I'm going to sell it. Well, when you have it shoot up like this, that means there's not much resistance, which means there's usually not that much support if they start backing right off again. So there's not a direct correlation, and as you can see, in a lot of times you have an uptrend, your next uptrend might have a little bit different moves to the move back up. Usually they sell off faster, and the reason for that is when you're making a decision to buy, you've got a couple things that you have to acknowledge. One, that you've made a decision to buy right here. Two, how much money am I going to put in it, and where am I going to find that money? And three, is it the time to buy? All right, let me get into it. Whereas if it starts selling off, most people only have one decision: sell. That's why things move a lot faster to the downside. Would volumes give a clue to that? Not necessarily. As we will show in our training, that volume has nothing to do with price. Now, volume does have added confirmation that, try to find a peak, or let's say up here, let's find something that has a much better, can't find something. So let's say, for example, right here you had a buy signal, the stochastic's turning up, and there was a big volume spike. That just adds added confirmation. There's been a dramatic change of ownership. Or on a day like this, where the volume may have moved across like this, and all of a sudden it spiked up, that meant there's a lot of change of ownership, which usually means that's more confirmation there's been a trend change. Did I do this one? Yes, I did that one. Okay. Yeah, motion of fear. Can we keep the recordings forever? Oh, no, forever. Once you download it, it's yours. So, all right. Guess that's about all I've got tonight, mainly because there's really not too much to say other than I don't think we've reversed yet. I think all we're doing is doing some consolidation. So the thing that we want to really keep an eye on is what's happening in some of the different sectors. Is gold ready to bounce, or is crude oil starting to back off? The biotechs, are they starting to come back up? Right now it looks like Labu is still selling off, but kind of a slow trend. But right now I wouldn't pay too much attention to the biotechs because there's really no direction to them. The Russell, I think the Russell, they said it was up 12% since the election, but notice the evening star signal. So that's a pretty good indication there's probably going to be some profit taking. Where's the profit taking going to go to? Well, the first thing we want to see is if it pulls back to the T-line, if it supports at the T-line. What is a belt hold pattern like? Alan, that's one of the basics. Can anybody remember a belt hold? Belt hold, belt hold. Anybody remember a belt hold? I know there was a few good ones not too long ago. Alan, I'll keep an eye out for some as we go through analyzing the charts. Yeah, it's usually when it gaps down way away from the T-line. So, and I wanted to find one, nothing on this chart. Let's see if it's actually on the NASDAQ. 1, 2, 3, 5. We'll find one. Well, the trend analysis portion of the weekend presentation utilized version 16 or so of EC 2000 instead of the very old versions in the videos on the forum site. It's going to be right here off these charts, Robert. Remember, It doesn't matter what version or what charts you're looking at or when the signal occurred. You could be looking at something in the Dow. It goes back. But the chart is going to look exactly the same whether you're looking at a chart from 2 years, 5 years, 15, 30 years ago as it will today. There's nothing that changes in the charts. The functionality of the software. Yeah, and we could probably do a session just on CCNet some night. I know we just did one on Metastock. So we could do that. I guess, but the reason I show the functionality on my charts that are older is because everything else is newer and easier to use. And if I don't show you how to use it, somebody that's using the newer versions right here in the chat room can show you. When you're looking at charts, how far do you go back? I only go back. I'm usually only looking at this area right here. This is the important area. Then it doesn't matter how far I go back. I want to see what's going on right now. But if I can go back and, I forget which one was a scoop pattern. If I can go back and see a handle and then a scoop pattern, you can do that almost instantly. So to change this chart, only takes a few clicks to make it much bigger or going the other way, making it much smaller. But my analysis is first right in here, what's happening. And then I can go back as far as I want to see what's happened in the past and what everybody else is looking at. For example, is there a trend line or is there a big gap area to fill, that type of thing. Robert, you don't have to set up the industry sectors on TC 2000. I don't know whether I can do this. Okay. Over here, you go up to here, you can do the Morningstar industrial sectors, and that will give you all the sectors. So today, as you can see, gold was up strong. Right below it was silver. So your sectors are already in the program. Belt hold, okay, SWPH. Did I do that wrong? Yes, I did. SPWH. No, not seeing a belt hold on this one. August. Yeah, that could be construed as a belt hold that didn't perform. We'll find some as we're going through. Cuervo is a belt hold. Yes, that's kind of your belt hold. But usually a belt hold will gap well below the trading range and come back up into the trading range. MP, no, that's exactly wrong. MP is saying I've heard that you have to be careful with gaps where they may come back and change directions to fill the gap quickly. No. When we go through gaps, you're going to find that a candlestick signal and a gap are your best friends. So you want to, if a candlestick reversal signal, I'm trying to think of something right now that, man, I usually can get my hands on one, but I'll show you as we go through. But a candlestick signal, especially in the oversold area, followed by a gap, it tells you that you're probably going to have a very strong run. Now, there's the old adage that all gaps get filled, which is true, but they may not get filled for 2 weeks, 2 months, 2 years. We're not worried about that. We're only concerned about what's happening right now. So that's kind of a belt hold. Yes. And I'll find some bell holds as we go through. Okay, so with that, Jim, go ahead and do the double line. Up, and now do, okay, and then 3.1 seconds do the next double line. I'll get everybody that jumped the gun. This one is getting set up. It's good looking, but if it opens positive, you know your next target should be filling the gap up here. So that's a good looking chart. And WABA, same scenario. You can own this as long as it stays above the T line. Quillo keeps backing off, so this one probably should have been closed out today. It needed to open positive and trade positive. So now you're in the process of probably doing a bearish J-hook pattern. Weibo, you stay long on this one. Ever since this, there was your bearish Harami. There was your bullish confirmation. You stay long. I would suspect at least coming back up to test this level, and if it breaks out through there, more than likely it's going to come up into the trend trajectory. American Express, not yet. Remember, you want to see a sell signal and a close below the T line. The other pattern that you're going to learn is that when you have a big move like this, whether it's 1 day or 4 days, usually you'll have a 45-degree come off of there. And that 45-degree is merely the uptrend continues until you see a sell signal. Now, on this one, Legg Mason, I'd be more apt to go short because now you've got a doji. Notice how they failed here at the 200 and gapped down. When they gap down after failing, that usually tells you everybody's trying to get out of this one with great enthusiasm. Yeah, so I wouldn't be afraid to short that one on a lower open. MHLD, kicker type signal. This one needed to open positive and trade positive. The fact that they gapped it down, notice that what you have right here is kind of a little island reversal. There was a gap up, now a gap down. I would suspect they could have enough selling force to take that one all the way back down to the 50-day moving average. And the FY, that's a good-looking chart. Just make sure your volume's good on a $3 stock. And Diana, this one you can start buying, but I'd be more apt to buy it if it came back up through today's high. That would tell me they are supporting here at the T line and starting the next leg up. That's kind of your scoop pattern. Notice how the selling stopped at the bullish Harami. There's kind of a belt hold. That means they've wiped out some more sellers. You stay long on this until you see a sell signal. We did IPXL. That one has a nice left-right combo down here. Bullish engulfing with a booster. You can buy this one on positive trading tomorrow with your doji sandwich. AQXP, same scenario. That's a good-looking J-hook pattern setup. You can buy this one on positive trading. AQXP. Just do that, we might have. I got a great tendency to duplicate. You can buy this one, positive trading. DM, nothing real wildly exciting about this. You've got a big fry pan bottom in progress, but nothing that I'd want to trade off of this chart. And AMB, you stay long. Just be very careful when it gets to the 50. Nothing spectacular on that, just a nice rounding bottom, so that's why you want to see what happens at the first resistance. Closed above the downtrending channel, possible J-hook. Yeah, you've got the J-hook bobble, and you did it with kind of a doji sandwich. You also had the T-line crunch. You can be a buyer of this one, especially if it comes up through the 200 tomorrow. SM left-right combo today. So observe the obvious. A bearish engulfing, bearish left-right combo. That tells you the sellers are in control. Where do you think your next target's going to be at a blue ice failure? Down here at the 200. Yes, I'd be going short on that one. True. Same scenario. You can be shorting this one. It won't be a real exciting percentage mover, but more than likely coming back down into the trend channel. OCUL, nothing here. Remember, you have to have a reversal signal. This is not a reversal signal. However, I would close it out. If it opened lower and started trading lower below the T-line, I'd close it out with the idea that I'd be ready to buy it back if it came right back up through the T-line again. Because you really don't have a sell signal at this point. AMD, get ready to buy this one. I would use today's high. If it came up through today's high, that would tell me the J-hook pattern is in progress. This one, UNT, I would be ready to go short on this one. Again, the left-right combo, the bigger the signal, the more compelling there's been a change of investor sentiment. Chalmers, this one has to open positive to stay in it, or be ready to short it on weakness tomorrow. Another one, EPZM, also has to open positive to stay in it. If it opens lower, then you've got the prospect of kind of a wedge formation in progress, so you don't want to be in it for a while. Freeport, another one that if I owned it, I would use today's low as my stop. It shouldn't come down through there. If it does, it's pretty much telling you that they are taking it down to the T-line. Amazon, another one that doesn't look healthy. If you're long, you should have been out of it today with it closing below the T-line. I don't know whether I would short it. You can short it on weakness. Just watch to see if it's doing a wedge formation. Apple, still above the T-line. It needs to open positive tomorrow also. Apple doesn't really have any direction. Same scenario on Netflix. Probably moving sideways or down, waiting for the T-line to catch up. And Tesla, not a great chart to be trading right now. It's having a hard time getting through the 50. Watch for the bobble, which means it could come back and test the T-line before going back up through the 50. EY is a short, you stay short. Yes, the bigger that gap down, the more compelling. So if you're shorting it, you want to see it get through this level right here. But right now, I wouldn't be afraid to be shorting on weakness. And Nordstrom's, I wouldn't go short, probably because it's got too much support in here. So the percentage move from here to here isn't worth all that much. I probably wouldn't be long, but I wouldn't be short. HIIQ, you just stay long. You're in the overbought area. You're starting to see exuberance. As a safety factor, you just put your stop at today's open. It shouldn't come back down through there. And TNDM, another one you can be buying. Just make sure your volume is good on this one. You can buy this one on positive trading. Cube, nothing of any great excitement on that one. More than likely, I'd be someplace else. Great Plains Energy, that one you can be buying. Just watch to see what it does at the 50 if it gets up to that level. Under Armour looked like a good chart. No, not this one. I wouldn't be doing anything with this. There's just no direction. What did I see that dot C? Yeah, I don't know what I was looking at. AES, another one that you can be buying. I'd be more apt to now buy it above the 50. Just not a real dynamic chart either. And Pandora, same scenario. You can be buying this one. Just watch to see what it does at the 200. You short these in this market. GATX, not yet. You do have a sell signal, but you're still above the T-line. I'd rather short it at 52, knowing that it was coming back down through the T-line. Lope, same scenario. Wouldn't short it until it showed me they were taking it back below the T-line. And Oak, same scenario. None of these, just because they've done a sell signal, you still need to see confirmation that they're going the other way. So far, yet you haven't seen confirmation. XIV, you're still in a slow uptrend. If you were long, use today's low as your stop. It shouldn't come back down through there, which is obviously also confirming that the T-line's not acting as support. ACIA, I'd be more apt to get ready to go short on this one and any weakness with a bearish engulfing signal right here at the T-line area. And GLBS, that came up strong and then backed off. You can still get ready to buy this on positive trading. I had a big percentage move today, up over 50% at one time. So you can still buy this one on positive trading tomorrow. And Grub, it's very slow uptrend. If you're long, you stay long. Look to see what it does once it gets to the 50. Amba, you're in the bobble. So if you're long, you should have stayed long. If you stayed long, you should stay long now, as long as they don't close it below the T-line. If you're looking to buy, I'd use 65 bucks to buy if it comes back up through that through the high of today, which would tell me you have kind of a bobble breakout. And McDonald's, that's still in a nice steady uptrend. It's not a very wild stock as far as percentage move, but at least you can see right now they aren't resisting at the 200. They're actually using the 200 as support. Oh, you lost your cursor. I hate when that happens. AK Steel, stay long, but if it comes back, if it starts trading weaker tomorrow, more than likely they're bringing it back down to the T-line. And MTL, same thing, probably some profit taking. But this one looks a little bit stronger. It hasn't gotten back below the T-line. And U.S. Steel, I might be coming back to test the T-line. Schnitzer Steel, it did come back down to test the T-line. So it has to open positive and trade positive to stay in it. HTHT, nice breakout, kind of a slow curve. I would expect more upside. So this is where kind of go back to see if there's any chart pattern. There really isn't. So I would just expect there's going to be a 45 degree off of here. AVXL, notice how it's stretched to get to the 200. So this is where if I have something like this and it stretches, as soon as it hits the 200, I flip to my 10-minute chart to see if they're backing off. If it is, I take profits with the idea that I can always buy it back if it comes back up above the 10-minute T-line and back up through the 200 as a resistance level. You can be buying this one. A lot of the REITs right now are acting well. They won't give you very exciting trade returns, but most of them have good dividend yield. So you buy them on a little bit more longer basis. UNG, natural gas fund, still acting well. Notice how the 50 did not act as resistance. So if you're long, I would use today's open as your stop. If it comes back down through there, that is telling you the 50 is acting as resistance. Facebook, this one's a hard one to trade. If you're long on this one, it has to open positive. If it opens lower, it's coming down to the 200, then you have to see whether it's going to support at that level or not. Facebook, I just don't trade that one at all. It's because there's never really any great returns off of it. And Nuveen Fund, well, how about that? Not coming up, Dan, sorry. When, another one where you stay long, but you're in the overbought area. I wouldn't want to see it close below today's low. If it does, that means notice how far away you've moved from the T-line. It needs to continue to trade positive. And Alta, that one has a possibility also coming back. Now, I say possibility. There was a lot of profit taking in a lot of the stocks today. So you have to see what happens tomorrow. ACC, you can be buying this one. Again, not a real prolific percent mover, but I would watch to see if it comes up to the 200 to test that level. And Infi, another one that has to trade positive tomorrow. If it starts trading lower, it's probably coming back down to the T-line, and as you can see, it's not doing anything to help the uptrend. So it needs to show strength. Micron, as it came out of this slow curve, you just stay long until you see a sell signal. NVIDIA didn't do too much today, but you're still above the 3T line, let alone the T line. So you just stay long. If you start seeing some weakness, you might take profits because at least they're going to come back down and test the T line. Electronic Arts, nothing. I wouldn't be long or short, no direction. US Steel, we did. PZRX, there's another one that has a good possibility of moving higher. So this one, if it opens positive, you can be buying. When they have a big percent move like that, that's where I'll start flipping to the 10-minute chart to see if that's much more useful. ELP, nothing of any great consequence here. Not unless they have a big move. That's just not a good-looking chart. So if I can look at a chart and not see any real great direction or a great pattern, and move on to something else. Chipotle looks like it's reversing. You might have this downtrending channel, so they might be taking it back down. So I'd be more apt to be shorting this one on weakness tomorrow. Cree, notice what it did. Doji right smack dab on the 200. Very simple. If you're long, it has to open positive and trade positive. Remember the simple rule of the doji. It needs to open positive. If it opens lower, you're in a bobble. So I take profits and then wait for it to come back up above the T-line. Jim, can you type in Abraham's email address? Yeah, if you've taken the session before, just email Abe and he'll alert you to what the passcode is on Friday. PDG. Nothing of any great consequence here. I wouldn't be long or short. You do have kind of a Morningstar signal. You're above the T-line. If I was buying this one, it would be above these highs, telling me they are moving away from the T-line, which makes this level right up here about the 50 as your next target. The light gray line is the 20-day simple moving average. The T-line is the black line, the 8 exponential moving average. Again, the T-line is about as effective an indicator as you're going to come across. And so the very simple concept with the T-line. Because the T-line is not on anybody's charts and the price uses that as a support and resistance level, it's like that's a Fibonacci natural number for human investing. So when you combine the concept of candlestick signals, which are the graphic depiction of human nature, and you add the T-line, which is kind of a natural support and resistance level of human nature, that combination now gives you extremely powerful probabilities that you're always going to be in the right place at the right time, depending on whether you're above or below the T-line. Marvell, as you can see, it's pulling back very indecisively. So if it opened lower, depending on what the market's doing, you might close it out knowing that it's going to bounce off the T-line. If it comes back up through where you sold it, you buy it back again. That just kind of protects you from holding on to something that might go zipping right down through the T-line. Another one that's losing, EXEL losing its steam. It has to open positive and trade positive while to stay in it. That was the one I was looking for, UA.C. And that one's not coming up for some reason, UA.C. Yeah, for some reason it's not coming up over here. Yeah, Under Armour was coming up, but I thought I looked up UA.C, and it had a nice looking chart, not the same as what Under Armour was showing us. Oh, I'm still trying to find a darn belt hold for illustrations. Nugget, you get ready to buy this one on positive trading. Facebook has a scoop. Nah, no scoop there. Scoop usually has a long flat handle right before the trade. Fannie Mae doesn't come up on these charts for some reason. I guess because they're down in the pink sheets. JD, nothing here either. You can get ready to buy this if it comes up through the 50, but not a real dynamic chart at this point. It should have had more strength off that kicker signal. And Yahoo, nothing real dynamic here until they can break out through the 50. See, you're in this downtrending channel. Nice strong uptrend. Put your stop right now over at today's open. But notice the chart pattern right here, this kind of bullish engulfing left-right combo with a booster. Same thing right here, left-right combo with a booster. Fluor, there's your best friend. This is why you use a gap, because it usually indicates a very strong price move. Will this gap get filled? Maybe, but we're not trading that out in the future. We're looking at it right now as what's happening in this trend. Okay, let's see. Okay. You can stay long on this one, as long as it stays above the T line. Oh, but over here, man, I don't know what it is. Yeah, for some reason I just can't get Under Armour.C over here. This is a good looking chart. Just make sure it's got a lot of volume. See, there's the gap there. That tells me they're probably coming up to fill that gap. That's where they're heading. If they fill that, more than likely that's kind of in conjunction with the 50-day moving average. You can be buying this one as long as it stays above the T line. So if you buy it at this point, Sylvain, just be a little bit more conscious that you don't want to see it close back below the T line. All right, everybody. Again, I think we were just kind of consolidating today. We might consolidate for a few more days while the T-line is catching up. But the big thing to remember is this, ever since, I think even when we did our training session right about these days back in August up there at the lake, it was already boring that we were moving sideways. It continued for another 2 months after that. But this is the important factor, is that told you there was a definite change of investor sentiment. Okay, everybody. Still some very good charts out there. So we will see you bright and early tomorrow morning in the chat rooms. We'll see you then.